Bloomberg Audio Studios. Podcasts, radio, news.
South Africa's stock market looks set to end the year well higher than 2024.
Under the new government, we have seen a really welcoming tone for private investment in the country. Business sentiment is up, so there is a real change, and the stock market is very, very attractive.
A better than expected budget and a more stable power grid has helped inject a vote of confidence into the country and hopes that faster growth might follow.
I think we are in a sweet spot. I've covered the continent personally for over 10 years, and I haven't seen a better time for South Africa.
On today's episode of the Next Africa podcast, we'll look at what's behind South Africa's economic turnaround, how long investor confidence might last, and what the outlook could be for 2026. I'm Tiwa Adebayo in for Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Joining me this week is Yvonne Mhango, Bloomberg Economics Africa economist. Thank you so much for coming on the podcast.
Thanks for having me.
So let's start with some of the key figures here. How have South African stocks fared this year compared to other countries? I know we've seen a surge in mining profits, and that has been driven by some buoyant commodity prices. But across the board, what's the picture?
So we've seen stocks surge amid a weaker US dollar, rising commodity prices, as you've mentioned, as well as reforms. The benchmark equity index is up almost 50% in dollar terms. That's quite significant. Resource stocks were, of course, boosted by a surge in commodity prices, particularly precious metals, which is what South Africa exports. More recently, we've seen investors rotating out of resources into banks and telecommunications. So you're seeing diversification there. And that's also been supported by earnings growth that you're seeing out of companies, falling borrowing costs. We've had interest rates drop by 150 basis points since September of 2024. And of course, easing tariff tensions have also helped. On the banking stock side, investors are attracted by high dividend yields as well as relatively low price earnings ratios. We've seen MTN Group, which is Africa's biggest wireless carrier, of course, headquartered in South Africa. That firm has benefited from rising earnings, also helped by an improvement in earnings in countries such as Nigeria and Ghana.
So what's triggered this rally, and what's happened to really build this confidence that we're seeing in South Africa?
So firstly, globally, we've seen monetary easing take place, in particular US rates dropping. That's helped renew interest in emerging market assets, which of course includes South Africa. It's also helped that we've seen a surge in commodity prices, as South Africa is a big exporter of commodities. So that's helped in terms of its improving terms of trade. So those are external factors that have helped South Africa. On the domestic front, we've also seen some developments. In October, South Africa was removed from the Financial Action Task Force list. And that's in response to authorities stepping up efforts to combat money laundering as well as terrorist financing. So basically, it demonstrated an improvement in governance, which was very positive for the financial sector. We've also seen fiscal consolidation taking place faster than anticipated due to revenue overruns this particular year. That implies that the debt to GDP ratio may actually peak this year, and we may start to see debt falling as soon as next year. That's something the government has been trying to achieve for several years, and it's in sight.
Yeah, I mean, one of the key themes in terms of Bloomberg reporting about this topic has been the change in government expenditure, for one, that curbed expenditure, which we've seen. What other changes have there been on the government side that really makes for a more positive picture about the South African economy?
So the formation of the Government of National Unity last year has also injected some optimism within the economy. We've seen business confidence improve, which has helped. One of the upsides of this coalition government is we've actually seen inadvertently competition between government ministers. As you know, the ministers are from different parties, and they're all trying to outdo, or most of them at least, outdo each other in terms of reforms. And that's been to the benefit of the economy. So when it comes, for instance, to our Home Affairs Minister, who has been modernizing the immigration system, making it easier for tourists from big markets like China to come to South Africa, and also making it easier for the issuance of nomad visitors that's attracted a group of migrants that contribute to the economy. Those are some of the changes we're seeing under this administration. The other thing the government of national unity has done is injected new thinking into the whole budget process. You may recall earlier this year, the reading of the budget had to be suspended because of disagreement around the proposed increase in value-added tax. In the end, that was scrapped. The argument from coalition partners was that they wanted to see other strategies used to reduce the budget deficit. So as you mentioned, part of that was to bring down spending, particularly inefficient spending. And that's exactly what we've seen. We've seen fiscal restraint. So that new thinking has helped provide new impetus in terms of fiscal consolidation, bringing down the budget deficit, reducing borrowing, and bringing down debt.
Okay, stick with me, Yvonne. When we come back, we'll talk more about the outlook for 2026 and what investors will be looking for to sustain this rally. We'll be right back. Welcome back. Today on the podcast, we're looking at South Africa's economic turnaround. Our Africa economist, Yvonne Mhango, is still with me. Yvonne, what's on the horizon for South Africa that investors will be watching closely?
So the one thing that's still missing is growth. So the positive news, and we had GDP data out this week showing an expansion of 0.5% in the economy. That was for the third quarter. One of the upsides is that we've seen 4 straight quarters of growth. We haven't seen that in a few years. However, growth remains pretty weak, and investors will be waiting to see whether this stretch of growth, the longest stretch of growth we've had since 2021, will be extended going into 2026. So that's one thing they'll be looking for. Another will be whether that growth will accelerate. And we're coming from growth rates of around 0.5%, 0.6% in 2024. Our estimate for this particular is 1.1%. But really what we're trying to do is see for South Africa is growth return to its long-term average of 2%. We haven't had growth of that amount aside from the rebound after the pandemic. We haven't seen growth of around 2% and above for over a decade. So that's one thing investors will be looking out for. They'll also be looking towards the 2026 budget that will be read in February. They'll be looking to see whether the targets for this year were met and that there was no slippages, which we don't anticipate. They'll also be looking to see whether fiscal consolidation remains on track. And the government is continuing to pursue that particular strategy, which we anticipate. The third thing I think they'll be looking for in 2026 is the local government elections. That will fall sometime in the second half of the year. A date hasn't been provided. It should be between August and November of 2026. That may possibly be the biggest test of the cohesiveness of the government of national unity. And as I mentioned earlier, that has been a big reason we've seen an improvement in investor confidence, as well as some of the reforms. So many investors will want that to continue beyond 2026.
And I suppose the elephant in the room here maybe is the South African-US relationship. We've talked a lot about it on Bloomberg platforms, these tensions between the Trump administration and South Africa, the removal of some aid as well. How much has that already been priced in?
So I guess on the upside, tariff uncertainty has eased since the 31st of July when the United States announced their tariffs for all their trading partners. So that uncertainty we had earlier in the year in terms of where we'd land is now gone. So we're now working with the tariff that we've been given by the United States. That said, South Africa has been assigned the highest tariff on the continent of around 30%. Most countries had tariffs of around 10%. So that is punitive. That said, the impact on GDP is expected to be relatively small. Our estimates at Bloomberg Economics is that the GDP at risk is 0.3% of GDP over the medium term. Of course, for the particular sectors that we're exporting to the United States, including the automotive sector, as well as the citrus and wine industry and the agriculture sector, those particular subsectors will be hard hit. But overall GDP, we anticipate the hit to be a lot smaller than it would be, for instance, for Asian countries such as Vietnam and Cambodia. There's always a risk that the relationship could deteriorate. We've heard in recent days that the United States has disinvited South Africa from next year's G20 meetings, which will be held in Miami. South Africa has opted not to fight that and just to sit out next year's meeting and resume in 2027 when the United Kingdom assumes the presidency of the G20.
Yeah, and, we've talked about growth as an important indicator that this is a real turning point. To what extent is this a story of recovery rather than outperformance? And how long do you think it will be until we see South Africa start to exceed its previous position and build on that?
The recovery will be slow. So I don't think we should expect to see growth over 2% anytime soon. That said, I'll speak to what's encouraging. So the growth number that came out this week for the third quarter showed that gross fixed capital formation has started growing again. Gross fixed capital formation, which is essentially investment, had declined for 3 straight quarters before the third quarter of 2025 data came out. So it's encouraging to see that. We think that's in response to the recovery in household consumption. The fact that there's demand returning to the economy means businesses are now willing to step up capital expenditure and invest in the economy. It also, we think, reflects the fruits of ongoing reforms on the logistics front, as well as electricity sector, which have eased the bottlenecks in the economy and encouraged investors to come back and into the economy and spend on capex. So that is encouraging, and that's what we'll be watching going into 2026. Expect that to increase. We do expect this longer stretch of growth we've had since 2021 to persist into 2026. And over the next 3 years, expect growth to pick up to around 1.8%. So yes, it's a recovery, but we're not going to shoot the lights out anytime soon. We're not going to reach the regional average growth rate of 4% for sub-Saharan Africa anytime soon, but at least it's an upward trend.
Yeah, upwards indeed. And just to finish, Yvonne, as an economist, your perhaps Christmas list of indicators that you'd like to see from the South African economy in 2026, just to know that things are going in the right direction. If you could make a list, what would be your top 3?
So growth will be right up there, in particular that it's being driven by investment. Would like to see investment return to the economy. We'll be watching what's happening in terms of the reforms on the logistics front, particularly allowing for operators onto the rail system and improving competition there. We'll be also looking to see how inflation fares. As I've mentioned, the anchor has been lowered, and the test for the central bank will be to keep inflation close to that 3% level going forward. And that, of course, will be a reflection of the credibility of the shift. Interest rates, I think there may be scope for further rate cuts. I mentioned the policy rate has been dropped by 150 basis points since September of 2024. I think there's scope for probably a couple more rate cuts in 2026. So that's something we'll be watching. An important one is probably unemployment. As you're probably aware, 1/3 of the labor force does not have jobs. While we have seen some moderation of the jobless rates in the recent quarters, it's still quite high. We hope to see the jobless rate drop below 30% in 2026. That will bring it to levels that we've last seen before the pandemic.
And you can read all our coverage on South Africa's economy across Bloomberg platforms now. Here are some other stories we've been following across the region this week. Vodacom Group, South Africa's biggest mobile operator, agreed to take control of East Africa's largest telecommunications provider, Safaricom, in a deal valued at about $2.4 billion. Safaricom's stock surged on the news. And Tanzania's President Samia Suluhu Hassan accused foreign powers of a colonial attitude for condemning deadly violence that marred her re-election in October. The United Nations has called for an investigation, saying hundreds of people may have been killed by security forces firing on protesters. You can follow these stories across Bloomberg, including the Next Africa newsletter. We'll put a link in our show notes. This programme was produced by Adrian Bradley. Don't forget to follow and review this show wherever you usually get your podcasts. I'm Tiwa Adebayo. Thank you for listening.